Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon and financial mumbo-jumbo. Today we are diving into NOV Incorporated's latest quarterly report, and let me tell you, it has got some interesting twists and turns, including a rather unique money tree. Alright, so we are looking at the quarterly report filed by NOV Incorporated. This is basically their check-in with the CC for the most recent 3-month and 9-month periods. It's like a financial report card for the company. Let's jump straight into the heart of things, the company's financial statements. First up is the balance sheet, and this tells us what the company owns and what it owes at a specific point in time. Think of it as a snapshot of their wealth and debt. On the 30th of September 2025, NOV had total assets of over $11 billion. That is a lot of stuff they own. Compared to December of 2024, their assets have slightly decreased. Now let's look at what they owe. Total liabilities are around $4.8 billion. This means the company owes money to others more than it owns outright. They've also seen a slight decrease in liabilities here. When we look at the equity section, the part that belongs to the owners, the shareholders have seen their equity grow slightly. On paper at least, it is good to note the number of shares outstanding has decreased from 2024 to 2025, which usually means the company has been buying back its own stock. Next, we have the income statement. This shows the company's performance over a period of time, how much money they made, and how much they spent. For the third quarter of 2025, revenue was $2.176 billion. That's a tiny drop compared to the same time last year. And for the 9 months ending the 30th of September, 2025 revenue was $6.467 billion, a decrease from 2024. It seems like sales are slightly cooling down. Gross profit, which is revenue minus the direct costs to make their products or provide services, has also gone down significantly. For the 9-month period, it's down from $1.517 billion to $1.305 billion. This indicates that the cost of producing their goods or services is eating up a larger chunk of their revenue. Operating profit is what's left after you subtract operating expenses like selling and administrative costs. This has seen a more dramatic drop. For the 9 months, it fell from $669 million down to $402 million. That is a big hit, and it certainly explains why the company's bottom line might be feeling the pressure. And on the very bottom line, net income attributable to the company for the 9 months ending the 30th of September 2025 plunged from $475 million in 2024 to just $223 million. That is a huge decrease of over 50%. The company is making considerably less money. This drop in net income directly impacts earnings per S-hair. Basic earnings per S-hair has fallen from $1.21 last year to just $0.59 this year. That is a significant decrease for shareholders. Now let's look at comprehensive income. This is a broader measure of income that includes unrealized gains and losses, which you don't see on the regular income statement. A big factor here are currency translation adjustments. For the 9 months of 2025, these numbers show a positive impact of $193 million. This means that as foreign currencies strengthened against the dollar, the company's overseas assets became worth more in dollar terms. This is a nice boost, but it does not affect the actual cash in hand. Moving on to the statement of cash flows, this is arguably the most important statement of all. It tracks the actual cash coming in and going out of the business. For the 9 months ending the 30th of September 2025, the company generated $678 million from its operations. This is down from $713 million in the prior year. While still positive, it shows a slight decrease in the company's ability to generate cash from its core business. In investing activities, the company spent $266 million for the 9 months of 2025. This was mostly on purchasing property, plant, and equipment. Last year, they spent $308 million, so they are investing a bit less, which could mean they are being more cautious or have less need for new equipment. Financing activities show how the company manages its debt and equity. Here, the company used a significant $451 million in the first 9 months of 2025. A big chunk of that went to share repurchases, totaling $230 million and $163 million paid out in dividends. This shows the company is actively returning capital to its shareholders. This statement shows the changes in the owner's stake in the company over time. Looking at the balance at the end of September 2025, total company stockholders' equity stands at $6.455 billion. This is an increase from the end of 2024. The accumulated other comprehensive loss has improved somewhat from a negative $1.625 billion at the end of 2024 to negative $1.41. $1 billion by September 2025. Remember, this includes those currency translation adjustments we talked about. The retained deficit, aka accumulated losses, has shrunk from negative $628 million to negative $568 million. This is a positive sign suggesting the company might eventually move out of the red on this front. Now we have the notes to the financial statements. These are crucial, they explain the numbers in the tables. Looking at inventories, the company seems to be managing them well. They are down slightly from the end of 2024 to 2025. Accrued liabilities, aka bills, that are owed but not yet paid are also showing a decrease. This is generally a good sign of efficient operations. This section is about how they make money broken down by different categories. They have two main segments: energy products and services and energy equipment. The energy products and services segment, which includes things like rentals and shorter-lived equipment sales, saw revenue decrease. In contrast, the energy equipment segment, focused on big-ticket items like offshore production equipment, actually saw revenues increase slightly. This shows a shift in where the company is earning its money. This is a really important one for future revenue. Remaining performance obligations are like an order book for work not yet done. NOV has a whopping $5.037 billion worth of work lined up for the future. That's a strong indicator of demand for their products and services. They expect to recognize about $544 million of that in the rest of 2025 and the rest over the following years. Now this is where it gets interesting. NOV is involved in litigation over royalty payments related to their drill bit technology. They're suing companies that stop paying royalties even though the patents haven't expired. This has led to a significant discount charge of $24 million in the quarter to reflect delayed collections. This is a major real-world consequence of that legal battle. Here, NOV talks about how they use financial tools like forward currency contracts to manage risks from fluctuating exchange rates. They are not using these for gambling, rather, to protect themselves. This table breaks down earnings per S-hair. As we saw before, the numbers show a pretty significant drop in profitability compared to the previous year. The company paid out $163 million in dividends for the first 9 months of 2025. This is up from $79 million last year, showing a commitment to returning value to shareholders. They have a $1 billion share repurchase program and have bought back over 17 million shares for $230 million so far this year. This reduces the number of shares outstanding, which can boost earnings per share. This section is about potential future obligations, things like lawsuits and environmental issues. The big one here, as we mentioned, is the ongoing royalty litigation, which could have significant financial implications. Now we get into management's own take on the company's performance. The energy products and services segment faced headwinds, with revenues declining partly due to lower drilling activity. The energy equipment segment, however, showed resilience, with revenues holding steady and even increasing slightly, driven by an expanding backlog. This is fantastic news. A book-to-bill ratio over 100% means they are booking more new orders than they are fulfilling from their existing backlog. This indicates future growth. The market outlook is a bit mixed. Lower oil prices and geopolitical uncertainties are creating a challenging environment. However, management believes long-term trends like increasing offshore activity and the growing importance of natural gas will continue to drive demand. This is where they talk about risks from things like currency fluctuations. NOV has a significant international presence, so these currency movements can have a real impact on their finances. They estimate a 10% currency swing could impact net income by $45 million. Alright, let's wrap this up. NOV Inc. is facing some headwinds. Their core business of energy products and services is seeing reduced demand and profitability, impacting their overall net income quite significantly. However, their energy equipment segment is showing strength, driven by a strong backlog for offshore projects, and they're actively returning capital to shareholders through dividends and share buybacks. The royalty litigation is a notable risk, but the company maintains a substantial future revenue pipeline. My take is that NOV is navigating a tough market, but their strategic focus on higher margin equipment and their solid backlog provide some comfort. They are managing their debt and returning cash to shareholders, which are good signs. However, the drop in profitability and the ongoing legal battle certainly warrant close observation. Investors should weigh the potential of growing offshore markets against the uncertainty of commodity prices and the outcome of that royalty dispute. What's your take on these numbers? What do they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.